All right, this is James Smith from GannAnalysis.net. My website is www.GannAnalysis.net. Today I want to talk about a couple of disruptive stocks that are being touted in the news lately. That these might be the next big stocks, to disrupt the economy. So Teladoc is the first one, TDOC. Now, from a fundamental perspective, somebody might have a good reason to promote this. I don't know. But I'm just saying from a Gann perspective, until you close above 158.54, the 50% retracement, there's a great risk that it'll come back down. And if it closes below 121.17, the 5/8 retracement, you're likely to continue down. So this is a very awkward time to be buying this stock. I would not recommend, based on the Gann's, retracement. The 50% retracement is the most important retracement. Gann believed you could take any swing, divided it into 8 equal increments, as you see here, and halfway is the 50% mark, 4/8 retracement. So normally, if a stock is strong, it'll find support on this and bounce back. This one did not. It actually took it out, went down to the 5/8 retracement, found support there, rallied to the 50% mark, and then seems to be falling back again. So I don't think that's a good sign. I think that's very negative. Also, while we're talking about the 50% retracement, Zillow, half of the high is a 50% division. So 104.05 is just half of 208.11. So guess what? It took it out, rallied back to it, and then it sold off. And it did that in sync with 180 trading day count. So from high to lower high, 180 trading days, as it met resistance and then sold off. So time and price, what Gann said is when time and price come together, you have a chance for a change in trend. And sure enough, the failure at this price resistance as you were meeting time resistance set up the slide. That's what happened. Now, if you look at Coinbase, you can see something interesting here. While we're talking about the 50% retracement, notice from the high, 429.54, half of that would be 214.77. It found support there once, twice, 3 times, 4 times, and here slightly above it. But basically, it shows you the importance of that 50% division. So if you had bought it back here, that would have been a good thing because, it set up the rally that you see happening now. My problem is that from this high to today's high, November 9th, is 90 calendar days. And from high to high at 90 calendar days, that's set up for a reversal. Now, it hasn't done it yet, but if it actually closes the day below 345.56, that would mean you have a bearish engulfing pattern on the candlesticks. That would be very bad. But even if it rallies back, chances are that it's going to fail in this area, somewhere in mid-November, because you have 45 calendar days, 150 trading days, 180 calendar days. These cycles are important Gann cycles. So if you rally back into it and form a double top somewhere in here, that sets up a sell-off thereafter. So I don't like it. I think now is not the time to buy it. I'm not saying it'll stay down forever, but if I wouldn't be surprised to see it pull back to this level, 265, or maybe back to 214. It could happen. So I don't think this is a good time to be buying Coinbase. Now, what I've mentioned here, 3 concepts, well, actually 1 concept, 50% retracement of swing, 50% division from the high, and a 50% division from the high back here. So all 3 of these charts seem to be responding to the 50% division or the 50% retracement of high. Just want to point out to you that Gann is about science. It's based on mathematics. It's not hard to divide the high by 2 to get a 50% division. Or to even, it's not that much harder to just take the 50% retracement from the high and this swing right here at 158.54. That's not very hard math. You can do that on your own. So I'm saying before you go ahead and buy into these disruptive stocks that are being promoted on the internet, I would do a little math. Look to see if you're above or below the 50% retracement or the 50% division from the high. That's going to tell you a lot. And I'm just saying that there's a lot of hype out there and people telling you to buy stuff that they already own because they want to promote the stock. Rather than listen to them, why not do a little math, figure out what's going on, and then you can decide whether to buy or sell. I hope this has been helpful. And again, my name is James Smith. You can find me at www.gannanalysis.net. If you're interested, send me an email if you want to chat about the markets or if you're interested in the service. Either way. And good luck with your trading.